Hi, this is Richard Campo from Rose Capital Partners. In this short video, I'm going to talk through the three main things you need to think about if you're getting an interest-only mortgage. The first is going to be either the deposit or the equity. So the golden rule is if you have more than 25% deposit to put down or more than 25% equity in your current property, the vast majority of lenders will then offer an interest-only loan. There is sometimes a little caveat as well, which is the equity amount needs to be over some certain monetary value, which is quite high. It can be anywhere between 150 to £300,000. So you do need to tick both those boxes, both in terms of percentage and overall value. Now, as always, there are some lenders that would do less, but as a general rule, that's where the market average is. Then the second point is around the income. So very similar to the first point, most banks set a threshold of around about £75,000 to £100,000, either solely or jointly, in order to allow you to borrow on an interest-only basis. And yes, again, other banks will do it on less, but certainly the higher the income, the more choices you've got. And then the last point is what's called the repayment method. Now, that's how you're going to pay the loan back ultimately. There's no solid rules around this, but it does need to be a viable repayment method. This could be sale of the property, it could be using your bonuses, it could be using other assets, it could be a combination of all those factors. Or what a lot of our clients do is actually mix this with a repayment mortgage as well. So you don't have to have all repayment or all interest only, you can blend the two, and then of that interest only element, how are you paying it back? So as long as that's viable, plausible, or ideally provable, you'll have the most options available. So hopefully that's been of use. Obviously it's a very complicated area, so if you do have questions or like to talk to the team, please get in contact and we'd love to help.